If sales tax is on your mental "I'll deal with it later" list, this is what later usually looks like. I'm going to walk you through how sales tax costs build over time and why acting sooner costs less than acting later. Not to scare you, just to help you understand the math, so stick with me. Here's a conversation I had recently. A seller reached out, 7-figure brand, selling on Shopify and Amazon for 3 years. They knew they probably had sales tax exposure in a few states. They'd been putting it off, not because they didn't care, but because every time they started to look into it, it felt overwhelming. Which states? How far back? What if I owe a lot? What if I make it worse by asking? So they did what most sellers do. They put it on the backlist. Told themselves they'd deal with it next quarter. 3 years became 3.5 years. Then they got a letter from Texas. Now they're getting it handled. But the cost is higher than it would have been a year ago. That's what this video is all about. Understanding how the cost builds and what changes that curve. So here's the thing most people won't tell you. You already know you have a situation. You're not ignoring sales tax because you don't understand it. You're ignoring it because dealing with it feels uncomfortable. And I totally get it. Looking into your exposure means facing numbers you don't want to see. It means spending time and money on something that doesn't grow your business. So you tell yourself you'll handle it when you have more bandwidth. But here's what I see working with e-commerce brands every day. The delay doesn't make the problem smaller, it makes it more expensive. Not because you're bad at business, just because the math works against delay. Let me show you what I mean with real numbers. Let's say you crossed the sales tax threshold in Texas 3 years ago. You've been selling there ever since. You haven't registered, you haven't filed, you haven't collected sales tax. Here's what you owe after 3 years. Back taxes, let's say $50,000 based on your sales. Penalties, Texas charges 25%. That's $12,500. Interest at 7.75% annually. That's roughly $11,500 over 3 years. Your total, $74,000. Now let's say you wait 1 more year. Back taxes grow to $67,000. Penalties grow to $16,750. Interest grows to $17,000. Total, $100,750. You just added $26,750 by waiting 12 months. That's what I mean by the cost curve. The longer you wait, the steeper it gets. Here's what changes that curve. When you're behind on sales tax, you have options. One of the better options is called a voluntary disclosure agreement, a VDA. Here's how it works. You proactively reach out to the state. You say, we have exposure, we want to get compliant, can we work together on terms? Most states will work with you. They'll often waive penalties completely. In Texas, that's $12,500 saved. They'll limit the look-back period. Instead of going back unlimited years, they'll cap it at 3 or 4 years. They'll let you set up a payment plan that works with your cash flow. But here's the important part. VDAs only work if you contact the state first. The moment a state sends you a letter, your VDA window closes for that state. Now you're responding to their process, you're working on their timeline, you're paying their penalties. That seller I mentioned earlier, the one who waited 3.5 years, they lost their VDA option in Texas the day that letter arrived. Instead of negotiating $12,500 in penalties down to zero, they're now paying the full amount. Same situation, different timing, different cost. Here's what most people don't realize. Sales tax exposure doesn't stay in one state. If you have nexus in Texas, you probably have it in Colorado and Florida and New York and Washington. Every month you delay, you're adding exposure in multiple states. A $5,000 problem in one state becomes a $20,000 problem across 3 states. A $20,000 problem becomes a $50,000 problem. And once you're past a certain point, states start comparing notes. They share data. One state finding you can lead to others looking. So when you're thinking, I'll deal with this next quarter, understand that the problem is growing in multiple directions at once. So what do? You stop waiting, not because you need to panic, but because early action preserves your options. Here's what that looks like. Step 1, understand your exposure. Which states do you have nexus in? How long have you been selling there? What do you roughly owe? You don't need perfect numbers yet. Let's get a ballpark. Step 2, identify your strategy. High exposure states with multiple years of non-compliance, those are VDA candidates. Recent threshold crossings with low exposure, direct registration. Step 3, execute before states contact you. File your VDAs, get registered, start collecting tax going forward. Most sellers we work with achieve full compliance within 90 to 120 days. They don't pay everything at once. They set up payment plans, they protect cash flow, they move forward. but it works better when you act while you still have leverage. So here's what you need to remember. Waiting doesn't make the problem go away, it makes it more expensive. Penalties stack month over month. Interest compounds, the cost curve gets steeper. VDAs can eliminate penalties and limit look-back periods, but only if you contact the state first. Once you receive a notice, your VDA window closes for that state. Early action preserves more options. Late action still works, but costs more. The cost curve bends based on timing. I've seen this pattern dozens of times. A seller reaches out, they've been putting this off for months or years, they're not sure what they owe, they're worried about the cost. We map their exposure, we show them their options, we build a plan. And here's what happens. The constant low-level stress of, I should deal with this, goes away. Not because the problem disappeared, but because they finally understand what they're dealing with. They know the path forward, they're no longer stuck. Within 3 months, they're compliant. They're collecting tax properly. They have clean filings. They have payment plans they can afford, and they always say the same thing. I wish I had done this a year ago. Because early action would have saved them money and penalties. It would have preserved more VDA options. It would have given them more control. But they didn't know and they waited. You don't have to make the same choice. If you're behind on sales tax or you think you might be, your first step is understanding how far. Not guessing, not panicking, just understanding. Schedule a free discovery call with our team. We work with 7 and 8-figure e-commerce sellers every day to help them navigate their sales tax compliance. We can help you map your exposure across every state. We can show you which states are VDA candidates. We can build a prioritized plan that protects your cash flow, because the best time to fix this was a year ago. The second best time is now. The link is in the description. Or if you want to get a better sense of where you stand before talking to anyone, take our free sales tax risk assessment. It takes about 5 minutes. You answer a few questions about your business, then you get a personalized report that shows you exactly where you stand. If you're in good shape, we'll tell you. We'll show you what to monitor so you stay that way. If you have gaps, we'll show you what they are, how urgent they are, and what your options look like. If you have significant exposure, we'll walk you through your options like VDAs, direct registration, payment plans, and realistic timelines. The link is in the description. Because the best time to fix this was a year ago, but the second best time is now, before the window closes.